from the station that's on your side. This is Channel 7 News Good Morning Arkansas.
You may have heard about the mortgage relief options during the crisis, but should you use them, and should they be your first stop? We'll answer those questions coming up after the break. Welcome back. During this truly unprecedented time of a global pandemic, many have lost their jobs and income. The last thing you should be worried about is losing your house, too. If you have a mortgage, you may be crunching the numbers to see how long you can make your mortgage payments. There are many resources and tips for homeowners during the COVID-19 crisis. Here to discuss the homeowners' options is Scott McElmurray, from the president and CEO of Bank of Little Rock Mortgage.
So, Scott, these are really trying times for a lot of people, a lot of uncertainty, a lot of people questioning their finances. Where will I be tomorrow? What will it be like in a month or 2 months,
Sure.
6 months down the road? For you guys, I'm sure you're getting a whole lot of questions from a lot of your clients.
We are. Yeah, I mean, so much of it surrounds, obviously, like you said, what's going to happen in the future. And so many people are affected. Not just financially, but obviously in many other ways. And so I guess first off, thanks to the first responders, right? Because they're just on the front lines, and we just appreciate all that they're doing. But when it comes to mortgage finance, the CARES Act that Congress passed gives some relief to people who have been affected by COVID-19 financially. And it allows for something called forbearance. Now, you've got to be careful about that because there's really no question about whether they can get it. Now, it's only on government loans. So that means anything that was an FHA or a VA or maybe a rural development or one owned by Fannie Mae or Freddie Mac. Those get a 6-month forbearance agreement, basically by just attesting that you've been affected by COVID-19. Now, I caution people on taking that because it's not a forgiveness. Basically,
a lot of people may not be completely aware of what forbearance means. What is
it? Forbearance basically is, in the context of the CARES Act, it's 6 months or up to 6 months that you can essentially defer payments. What then happens is, in other words, you don't have to make a payment for 6 months or up to 6 months, or you can negotiate a partial payment or something along those lines. But after 6 months, there's a reckoning, essentially. You have to basically reinstate the mortgage, and that means bring the deferred payments current or come up with some other deferred arrangement after that. So let's assume your payment's $1,000 and you take the 6-month deferment. You have $6,000 that's still now due, and you have to make payment at some point or on some and the reinstatement means that you have to pay it basically after the 6 months. Write us a check for $6,000. If you can't do that, then you go into other options of a workout situation of how to get that back, as well as start making your payments again. Now, the CARES Act allows for, after 6 months, if you still can't, if you're still affected, you get an additional 6 months. But again, you're just adding to the problem. You're pushing the problem down the road because it's not forgiven. It is just deferred. And it's not a situation where, oh, well, we'll just tack it onto the end of the loan and you added 6 months or 12 months to your loan. It's a matter of, we have now, again, in my example, up to $12,000 that we now have to get back in a quicker period of time. So if it's a year, you've just added maybe potentially $1,000 to your monthly house payment.
So, Scott, what's your advice to people who may be suffering from a loss of income right now and worried about that mortgage? What should they do?
Well, the first thing they need to do is contact their servicer, meaning who they're making their payments to. Look at their mortgage statement, determine if they can. A lot of times the statement will tell you if it's an FHA loan or a VA loan or some type of loan. If it's a government loan, the first thing they need to do, whether it is or not, is contact their servicer and just understand what their options would be. And then determine, making a budget. Can you continue to make your mortgage payment? If you can, that's the best advice I can give, is to continue to make that payment. If you need payment relief, you certainly want to discuss your options and understanding that at some point you're going to have to pay this down the road. So you want to make sure that you're not just making it a lot easier on yourself now to have pain in the future.
We've heard that the stimulus packages that are being looked at and that are actually coming along the way. So if people can hold off and wait and get some of that and not do some of the things that could end up costing them more in the long run, then that would be your advice right now.
Absolutely. Again, if they have the ability to make the payment, continue to make the payment. This is really made for people who maybe had a total job loss. Or someone who obviously, let's say they own a restaurant right now. Obviously, we know that they're struggling. And so they need some kind of financial relief. But it really should be a last ditch effort or last kind of option for them. And then it's there for them to utilize and then work out down the road. And that's what it's made for. It's for short-term or temporary disaster relief. Prior to COVID, this was an option when there were short-term disasters, again, for things like Katrina or other, type of weather-related disasters. This program was in place. It's just been enhanced now because of COVID.
Yeah, just because it's here doesn't mean you necessarily need to use it or should use it.
Correct.
To use money for different things, you still need to try to make that mortgage payment. How has office changed for you guys, Scott, there? I'm sure you're still taking calls and maybe some of you guys working from home.
We are. One of the, I guess, if you want to say there's a silver lining or a positive impact of COVID, it's really driven interest rates down substantially. And so we're extremely busy refinancing a lot of people's loans. And that's the other thing. When it comes to forbearance, if you go into forbearance, it really stops a lot of your options going forward until you get out of that forbearance. In other words, if you're in forbearance now, I cannot refinance your loan. Or potentially, if you sold the house and there was some forgiveness, then you get into a situation where you may not be able to finance the new home that you're buying. So again, it's only meant for people who really, really need it. And it could cause you more problems than what it solves if you have the ability to continue to make your payments. But we're like everybody else. We're social distancing. We're doing a lot of stuff remotely, and so it's been a challenge certainly because the efficiencies that we've always enjoyed maybe are a little less, but it's also made us stronger, I think. And I think as a country we'll be stronger because it's made us do some things that were available to us that we just put off because we didn't need to. And so, we've got a lot of remote workers and we're pushing people home, but we're still able to continue on, and hopefully others will be as well. We'll be, get this thing behind us quickly.
Scott McElmurray, the president and CEO of Bank of Little Rock Mortgage. Thank you so much for your time.
Absolutely.
Some good advice, a lot of questions you've answered today that I know a lot of our viewers have. So we appreciate your time.
Absolutely. Thanks.